Green Rush, Mining the Energy Revolution with Matt Watson.
Hello and welcome to Green Rush, Mining the Energy Revolution. I'm your host, Matt Watson. Each week we dive into the periodic table and pick another element to go drill down on. This week we're going to talk about gold again. And again, just to reemphasize for our listeners, gold is so important in the technology sectors and electronics. It is so prevalent in electronics. Joining us this week, we have a special guest, Mr. Joseph Cavatoni from the World Gold Council. He's a market strategist and principal chief executive officer of funds there. Joe, welcome to the program.
Great to be here. Thanks for having me, Matt.
Oh, it's great to finally connect. So what I was hoping you to do, Joe, is I got a couple screenshots of the World Gold Council's website. Maybe you could just tell us a little bit about what the World Gold Council is all about and what your objectives are.
Sure. So to start, we're a member organization. The world's largest gold mining companies make up our membership. We're a global organization with about 75 people focused on market development, policy, research, data, and insights. And really, our primary objectives are to educate people so that they can have a higher level of trust, right, a higher level of understanding, a better level of understanding and appreciation for gold, and right, to find the comfort and confidence that they need to consume the asset. So whether it's in the form of investment or in the form of a consumable good, or like you mentioned in electronics, really having that information at everyone's fingertips ready to go so that they can make an educated decision on exactly how to get involved in the gold market. And that's what we're seeing, a lot of it.
So I didn't get into it, but the world, the data hub, the gold hub. Now, the data behind the scenes, that's driven not by the World Gold Council. I think you outsource that to other bodies to drive the data collection. Is that correct?
Yeah. So if you think about what we're trying to achieve with Gold Hub, it's pretty simple. If you think about what a central bank would have or what any investment management company would have around their primary assets that they cover, it's a consolidation of all the critical, relevant data, insights with that data, and then in addition to that, tools that can help people analyze and get better understanding of that data. And that's really what we're trying to achieve with Gold Hub. So we work with a number of different organizations, some informal relationships like Metals Focus, where they do a lot of the data mining for all the different sourcing and supplying of different information around demand trends. But we take that and then we enhance that to give our insights and additional color from other sources as well as to exactly what's going on in the gold market. And then also use tools to help people predict and get a better understanding of how those behaviors amongst those different demand types will change. So we also consolidate information like Bloomberg data and other information to give a complete picture, because it's one of the things that we get a little bit challenged by is sometimes you'll hear comments being made about a segment in the industry, but it might not be complete. A good example of that is exchange-traded funds. We cover every physical-backed gold exchange-traded fund. So if you want a complete understanding of the space, you go to Gold Hub because they're all there.
Right. Understood. Well, let's take a look at some of the price trajectories here on gold. So pulling from the LBMA database here, we looked over the past, how many years is this? 50 years, 55 years now. We've seen about an 8.2% CAGR over the long haul from where we started to where we're at now. This is expressed in US dollars. Here's a similar chart, a little bit shorter time frame on euro-based, a little bit steeper slope, a little bit more linear too, I might add, closer to 11% CAGR. So gold obviously appreciating. And I want to get into with you, Joe, on what's driving the market in the near term. I want to make this very much a tactical discussion. And I jotted down just a few obvious points, I think, and please feel free to add to this. But the weaker U.S. dollar is part of the mix, expectation on what the Fed's going to do in the middle of September in its next meeting, and especially in light of some of the job market reports. Central bank buying, which to me it seems to be about 2x our kind of long-term baseline. So we're still seeing strong central bank buying. And then, of course, all the geopolitical tensions, which we could rattle on about. But these, to me, are kind of the key core issues driving the market in the near term. Do you see any corrections or missing items here?
No, I think what you've got are all the key elements of what's making up a really, really amazing picture for the gold market. And I think where we would start with the discussion would be to give a little bit of a precursor to these points. The points are correct. They're actually accurate. But we would remind everyone that gold is a global asset. And what we would remind them of is that consumption is in the form of jewelry, investment, central bank demand, and then technology. And from there, you can start unpacking these different factors that are at play. Your first point around a weaker dollar and second point around where those monetary policies in the West are going to develop, you're absolutely right. Those have been headwinds on the price of gold because it's kept Western investors on the fence, holding allocations where they have been, but they haven't made new allocations. If you look at what's happened in the ETF space, you hear a lot of noise, as an example, around people, redemptions in this market, everything's going in the wrong direction, but the price and the assets are still holding firm. They're outpacing the growth of the redemption pace. So they're still holding their allocations, but they haven't allocated new because of opportunity cost for other assets. Gold's expensive to hold when you can get 5% on your cash. But the big story I think you'd hit on, central bank buying, is pretty amazing and it's pretty fundamental. Now we're at 14-year highs and record-setting years in 22 and near record-setting years in 23, and a first half that looks extremely strong, slowing a bit, particularly from China. But at the basis of all of that is concerns around dollar-based assets, the future of the dollar, their own homegrown inflationary concerns, and a need for a liquid instrument that they can use in a time of financial need. And that's actually what's been driving particularly emerging market central banks. And they've done a lot over the last 3 years in terms of the pace. I think you're averaging out the right kind of levels, but I mean, the pace has been substantially higher. And again, record setting over those last 2 years. And then the last point you bring up, which is geopolitical tensions, that comes and goes. It's kind of like the unknown unknowns. Those are kind of the flare-ups in the market. We just had a moment in the markets on August 5th when we saw risk assets coming off an unwind of a yen trade, basically really put a lot of pressure on risk assets, and gold did exactly what it was supposed to do. Now, it didn't necessarily lead to a lot of consumption, but it reassured Western investors, Eastern investors, that they basically got the right kind of diversifier in their portfolio.
Right. No, and obviously something's up when you look at the numbers in 2024 year to date. My goodness, what a tear that we're on here, whether you're talking US dollar based, euro based, or British pound based, some substantial gains throughout the year. And it looks like it all kicked in right at the beginning of March is where
it sure did. We had a pretty average January. We had a pretty average February. I think when the Western markets, and actually a combination of the Western markets and Eastern investors, this is probably the most interesting soundbite that's not necessarily getting as much attention, particularly in the US, as maybe it should, is that the Eastern investor, China, India, and Southeast Asia, they have been adding gold as part of a component of their portfolio. Now that shows up in our OTC demand and somewhat in our bars and coin demand that you see in our reports. But in that number are people allocating in a place like China to gold. And remember, the ETF market's seen its best year in Asia, about a $3+ billion inflow when everything else is a down market and everyone's talking about outflows. China and India just mopping up assets. Japan, highest level of AUM and ETFs that we've had ever in that market. And at the end of the day, it's basically looking at a real estate market, for example, in China that's struggling, equity markets that are quite volatile. And again, concerns around inflationary pressures in those markets, and people are allocating gold as a diversifier. And again, also about this risk of devaluation of currencies. And Matt, you raise a really good point about the dollar. It's the first point on your chart that you put up around things that are driving the gold price. I think that's a lot that's on people's mind right now. The question of what direction will the dollar go over time? How will the administration that will get elected in November of this year, which is probably something to add to point 4, which is the political landscape. But ultimately, what's going to be the direction of that dollar? How's it going to play out? And actually, is it going to weaken? Is there going to be a way for the U.S. to deal with its concerns with debt and debt sustainability? And can they maintain a strong dollar when we know that there's lots of pressure on it? This is on the mind of all central bankers, but it's also on the mind of Western investors.
By the way, great segue to the very next chart I had prepared. So here you see basically the large bucket demands, with jewelry being the biggest bucket. Technology is kind of tough to see in the colors here. It's a blue tone. The green is investment, and then central banks in the pink, which jumps out like a sore thumb. And you look at a number of quarters here. You can see the last 2 years, a very elevated track. And like you said, I think Q3, the numbers are not outstanding, but they're stronger than I think our baseline for Q3 as well so far. Would you agree?
They most certainly are. And I think we need to, on our side, we've kind of adjusted our expectations for central bank demand down somewhat. Now, we've had 3 months of China not reporting official IMF holdings of gold or purchases of gold. So that's going to weigh in on the level of demand that's basically going to be shown in the numbers. But second quarter still showed a good quarter. But again, we're coming off record years, 22 and 23. We're on unprecedented levels. So, over 1,000 tons in both those years. And that's actually really important for us to remember that while it looks like the number's dropping, it's still a very substantial number and still continuing to be picked up by beyond just China in terms of the central banks, Poland, throughout Southeast Asia, et cetera. It's just lots of activity and a really good case for it to continue.
So let's run through these major buckets real quick. So jewelry. So here's your jewelry fabrication demand. And you even have a nice capability where you're showing, the buffer, the inventory buffer, which can be positive or negative, if you will, but that buffer. But, the jewelry, it's taken a step back and putting into the context of the price climb that's occurred here and then another jump up here more recently. Yeah, it's slowed up a little bit, but what's your take on the jewelry market? And again, it's trying to slow here.
You named it. High price consumer behavior is impaired by the higher price. So when you think about the form of jewelry, it's a consumption asset that basically is very price sensitive. To our surprise, first quarter for China in particular was a lot stronger than we expected, but second quarter is coming into line with what we were thinking. Now that's basically, again, it's a price dynamic. And actually on the producer side, the fabrication side, we're hearing from the ground in China that things are slowing down quite a bit. But here's an interesting dynamic that can play out. And this is, again, going back to my initial point of saying it's a global asset, and we always remind people of that. So while China might be suffering a little bit, India has just made a move on tariffs and taxes that's going to incentivize more gold to be consumed. And we've already seen that happening in the flows within the last 3 weeks. It's actually really an exciting time. And to see that picked up already on the back of this announcement, it's like a discounted price to gold right now when you're hitting record level highs and people are moving into it. We're also moving into an auspicious time of the year. That weighs in on jewelry. So not an easy market to kind of guess, but your opening position would say high price, probably putting pressure on it. Western markets for sure. But the China-India dynamic, we'll see how it plays out. Slowly in China and
India demand combined on jewelry, it's some 70% of the demand. Is that right? Somewhere in that neighborhood?
It's a substantial portion of the demand. It still is. And remember, these are markets who have historically had jewelry play a role, not only in the pure consumption context that we might know in the Western markets, but it's also a form of savings. It's a form of financial inclusion in terms of how gold gets woven into the system and handed down through generations. So it's more than just a little bit of bling that you might want to wear on a Friday night when you're out in the bars, man.
Some of us bling more than others. Hey, and so the one thing I noticed, and I just annotated that same chart, is you get a little bit of a lag effect too as the price shifts. It seems like it takes the customer sentiment a while to adjust to the new prices on whatever piece of jewelry.
It does, and it also lines up with certain levels of seasonality that may be playing out at the point in time. So there's more than just a simple price indication that tells us exactly when, and it does take a little bit of time to feed its way through the systems for sure. And I think that also takes place with the fabrication side as well. You'll see a little bit of a lag, but ultimately those higher prices are a challenge. What does stick out when you get the higher prices is recycling. And that's a component in the jewelry space that definitely we'll see more coming online over the next 6 months for sure.
All right. So before we dive back into this fascinating material on gold, I want to take a moment to thank our sponsor, Revival Gold. Stick around for the next 30 seconds. Revival's going to have a short commercial for us. We'll learn what it's all about.
Revival Gold, ticker RVG on the TSXV and RVLGF on the OTCQX market, is one of the largest pure gold mine developers in the United States. The company is advancing engineering and economic studies on the Merkur Gold Project in Utah and mine permitting preparations and ongoing exploration at the Bear Track Arnett Gold Project located in Idaho. The company is financed and currently focused on the completion of a preliminary economic study on heap leach gold resources at Mercure and continued exploration along 5 kilometers of underexplored structure at the company's multi-million-ounce orogenic gold system at Bear Track Arnett. For more information, please visit www.revival-gold.com.
So here, the next big block beyond jewelry is technology demand, showing electronics in the purples, other industrial demands in a blue that's kind of hard to pick up, and then green is dentistry. The electronics piece in particular, I can explain a drop that occurred from a peak in 2010 down to the 2014-15 timeframe in electronics, specifically a product called bonding wire, gold bonding wire that decreased. But Joe, I've mentioned this to you before. I can explain about a 40 metric ton decline from that action, but I think gold should be creeping up in electronics ever since, and I can't reconcile that with the Gold Hub data. So this is one point of heartburn I've had for over a year, for what it's worth. I don't know. And just to feed you a little bit more data, Joe, on the semiconductor, Tanaka, one of the biggest bonding wire producers on the planet, they've got some 6 factories that produce nothing but bonding wire. And again, their mix was very heavy gold-centric, pure gold. And that's swapped over time to where you have more pure copper, palladium-coated copper, and silver products are displacing some of this gold. And so when you look at it from a troy ounce perspective, yeah, there was a decline. But when you consider bonding wire now and all the other uses of gold, again, I contend we should be seeing a creep up in electronics, not a gradual decline. So I got a little bit of heartburn there for what it's worth, Joe.
Well, I think the general idea of what you're hinting at is exactly what we're hearing as well. And I cannot pretend to be an expert in the space, but what we are hearing is that the use in supercomputing is definitely picking up.
Oh, yeah.
And actually, one thing that's actually quite interesting is the Royal Mint in the UK has actually announced a recycling program specifically targeting at electronics and consumer electronics. So there's a lot that's happening in the space. It's really kind of unfortunate that it's just so small relative to the other forms of consumption for gold that it doesn't get as much attention. I also think that, when we talk about technology, some of the more amazing applications that we see are in medical testing. We've come out of this world of COVID and the information that you see, that the dreaded red line that you see or the purple line that you see on your rapid flow test for whatever it is you might be testing, that's gold that makes that line show up. So you can thank the gold market for giving us a clean and effective way to get testing done. But I think to back to your point on electronics, it's an area that we're hearing more about. It's an area, again, it's focusing on supercomputing. And I think it'll take a little bit of time for it to come into its own. And actually, first and second quarter of this year alone has shown those increases that you've been talking about wanting to see and expecting to see. So I think it's a watch the space. Again, likely not to be the biggest driver of gold price, but a key component which continues to keep it in the industrial application, but also at the cusp of kind of some really amazing work that's being done and admirable work that's being done, particularly in the healthcare side of things. And actually, it's quite cool. We have a podcast, and John Reed, my colleague, and I have actually interviewed a few people in the space around technologies coming into the market and also those medical applications. It's really, it's amazing stuff. You'd never know it unless you start digging below the surface. Again, back on tech though, I think this is an AI supercomputing thing that keep an eye on.
Oh, I couldn't have said it better. I think you're right. By the way, on these point of care test kits, you're right. Nanocolloidal gold is almost always the catalyst that's used to help in separating these ligands and to see these effects occur on whether it be a respiratory infection or whatever test that you have on a point of care test kit. Those things are all using nanocolloidal gold, and I think there's more gold even in the any blood work that's done. There's typically nanocolloidal gold that's involved in some form or another. So I think you're right on the medical side, and on the AI side. Yeah, I could have said it more. E-waste guys. What is it? The e-waste guys, when they hunt for gold in the system, what they want is these data center server blades and the hard drives and the printed circuit cards that go along for the ride in those spaces. Those are some of the most gold dense populations of electronics products that there are. And yeah, when you look at the semiconductor market, again, there's going to be this explosion in growth. A lot of this is going to be driven by that AI that very rapid rollout of AI. So some of these data centers are getting even larger and larger and pulling down more gold along for the ride. So yeah, I think the forward-looking technology is certainly going to be an upward trajectory for sure.
Yeah. There's two things to add to what you've said about technology. The first is that a lot that's being done at the government level is focusing on critical minerals.
Right.
Our position on that is that we understand the construct, we understand the importance of the list for the U.S., the UK, Canada, Australia as examples, but we don't necessarily think it's representative of what's important and strategic. So we've been doing a lot of work to better understand the drive behind that, and exactly education around the legislators in particular to say, hey, look, critical is one thing, but strategic is as important. We just don't want to see gold disadvantaged simply because it doesn't pass the test that the GSA has put out around production from the U.S. domestic side, which is okay, and we understand it, but you can't disadvantage gold. And the reason we are so intrigued by this is that you just don't find a single site for a single asset. And you've got to understand that in a market like we're in right now, when gold is performing exceptionally well, that might be moving miners more towards gold, which might bring more out of the ground in other areas. So we just want to make sure that they have a better understanding of the market. Again, that goes back to the first point you made around Gold Hub. Like, that's why we're putting all that information out there. So they understand the space, because you need to understand the significance of gold. And the second thing I wanted to give you a heads up on is the podcast that I did mention on the technology space. I don't think I've ever mispronounced more words than I've ever done in that podcast that I did, because there are so many technical terms that I literally practiced and still got them wrong when we recorded it. I was the laughing stock of the group that was on that call.
Welcome to my world.
Exactly.
Gold investment demand of physical bars, official coins, other coins, and then ETFs in the pink, and that obviously can be a positive inflow or outflow depending on the quarter. But you look at the trends here. So we've gone through a span with the pink largely in a outflow, and then more recently we're seeing more recently seeing outflows now here in the most recent quarters, where inflows were building up while the prices were lower. So a very interesting picture there. I've got it ETFs expressed here. You can see kind of the peak accumulation. We've lost about 22 million ounces with these most recent outflows as this thing's gone down. But to your point that you made earlier, this is during an interval while the price is climbing. So the overall position relatively net unchanged. I don't know if you had any other comments there, Joe.
Well, I think what we want to make sure everybody understands is the ETF space is an easy space for everybody to get data on, right? 6%, 7% of the overall investment market worldwide, very transparent, daily flows. Everything's very clear and key to see. We're going to increase the transparency around ETFs by adding another number to our data set in the coming quarter. We're going to start talking more about the secondary volumes that are trading, because I think it's an area where people are missing a trick. They're saying no one's interested in gold. But if you look, I think I just did the numbers through March of this year, and I kind of stopped and let the research team kind of build it up. But basically, if you look through March of this year, there was over 1,000 tons that was actually exchanged in the secondary between investors. So think about what we've been hearing. We've been hearing, about 150 tons out of the ETF market, but over 1,000 tons is trading in the secondary. So that tells me one big message. People are still very active in the space, very interested in the space, and the net flows might be large enough to catch attention. But again, it's just a small element of the bigger flows that are taking place. And on top of that, again, 6% of the investment market, bars, coins, and small forms of investment, gold, still the bigger number, still the global number that matters. Whether it shows up in our OTC flows or in bars and coins in our number that data set, you see that investors are at the table. The Western investor in the ETF space has been holding back again because of that opportunity cost of holding gold. But the last couple of months, what we've seen, Europe moved first, and we've had nearly 3.2 billion in the last 3 months of new flows into Europe, lowering that reduction that we've had over the first part of the year. And in the U.S., we're kind of rivaling that number as well. So you start to see these investors coming back. And really right now, we're just waiting for that mid-September date on the Fed's policy. Once that rate environment starts to move, that's when we expect the Western investor to come back in size.
Right. Hey, I was posted a question to one of our good friends, Bart Mellick from TD Securities, and he asked me to give you this question. Given the apparent fund long over positioning here, what sort of risk is there to the gold price if there's an adjustment in this?
I think what we see is that, and I'm going to unpack what I think he's talking to. I think what he's talking to is the fact that speculators are moving the price a lot right now.
Right.
Okay. So the first part of the year, we have confirmed data that tells us the Eastern investor central banks were the price drivers. Right now, what you're seeing is COMEX positions, net long positions, pretty substantial, and actually even options on the largest ETFs in the market that showing you that mid-September date, that expectation for rate cuts, pretty high. I don't think it's going to have that much of an impact, even if we don't get a rate cut. And I'll tell you why I think that's the case. I think that the speculative level that the price has been pushed to is still getting the support around the globe in the form of flows into India, flows from central banks. Eastern investors probably not done, maybe slowing at a pace, but not done. And ultimately, it's going to be a long shot that rate cut doesn't come into play. And I don't think that the Western flows have been anywhere close to what they are likely to be when we start to see them coming back to the table. So I think that is it overcooked a bit? Maybe a bit, but I don't see it being more than maybe $50 to $100 on the gold price. And I still see that the global dynamic of demand will support the price around any time mid-September into the end of the year.
All right.
Now, one last point to bring up. We haven't talked about the U.S. level of debt, the sustainability of debt, the lack of anybody on the political side to talk about their plans for that in the coming weeks.
Yeah.
Still a big question. So that's a dollar question that I think people need to just keep an eye on that space. When we get closer to the election, when we see what the results are going to look like, you're going to see two dynamics. One, their plans around how they're going to try and deal with that. No one's given us anything clear as an indication at this stage. And number two, how they're going to basically position the U.S. from a policy perspective, which probably take a little bit longer to feed into the gold market in terms of the price positioning.
Interesting. I had central bank demand broken out just so you can see it a little bit more clearly, but I think we beat this horse dead already. Let's talk price forecast and where are we heading? There's an article Goldman Sachs was pushing a $2,700 price the other day. I saw another group pushing $3,000 in fairly short order. So somehow jumping up into this range. A lot of people obviously talking the upside. What's your outlook for all this, Joe?
So we don't. Because we're a member organization and we have mining companies at the heart of what we do, we don't officially predict the price of gold. What we can tell you, though, is that lots of the market expectations are right in line with those numbers, 2,700, 3,000. And actually, we see a very strong case to support those estimates in terms of the overall trajectory of the gold market. And it's simply because, like I've said, and it's almost like you said, beating a dead horse here, we're talking about central bank demand still being robust and a strong case for the diversification against their dollars and any political risks that could develop over the next 6 to 12 months. The investor market teed up in both the West and the East to continue to be looking at risk factors, bringing that flow to market. The weak spot right now is jewelry. But again, a market like India has seemed to have done some very interesting moves on the tax side and the tariff side to incentivize consumption of gold. Right. But we're going to keep an eye on that. That's probably the weakest point in the demand profile that would put a pressure point down on the gold market. But if the markets develop as we're expecting, then we see lots of those expected levels to be achievable for sure. But also what I'd say is a strong case for the market to continue to support the gold price at these 2,500 levels.
All right. So I noticed you're a podcaster now.
We are.
So Joe, I'm going to let you plug yourself here. So tell us about your new podcast.
So my colleague John Reed and I are co-hosts of our Unearthed podcast, which we launched about a year ago in about September of last year. And actually, we are super excited with the success we've had. And our goal with the podcast is to continue to go into different mediums of information and content to give people education on the gold market, whether it's with mining companies, with market professionals in the financial markets, or if it's in the production side. We just did our first release of a 2-part series with the Royal Canadian Mint. super cool podcast talking about tracking and tracing technologies, which basically we're working very closely with the LBMA on that kind of information. That's a technical side of the market we haven't even talked about, but just really helping people get a better understanding in a fun kind of way. John and I got a tour, for example, of the Royal Canadian Mint, which we've not done, but amazing facility, really, really exciting company that has signed on to Exedris, which is the platform for tracking and tracing. And ultimately, we're just bringing our insights to the market. We're about to come out to the market with a monthly update on the market insights that we're seeing and what we're hearing from the ground. So stay tuned for that and subscribe where you get your podcasts. Unearthed.
Spoken like a true pro. Well, so Joe, is there any other final thoughts, closing thoughts you want to share with the listeners?
I think that's it. When you think about the development in the gold market, I mean, there's lots of really good content and information to understand what's driving the price. I think the market structure work that we didn't talk to, we could at another episode, be really interesting because, again, this will be an area where gold and the gold market might lead other metals for tracking and tracing and information around databases that could be used for the true digitalization of gold, the dematerialization of gold into the digital context. But other than that, I think we've touched on all the right points around keep an eye on the asset and keep looking at it, how it should fit into your portfolio.
So Joe, I just can't thank you enough. Again, appreciate your time, sir. Thanks for joining us.
Been a pleasure, Matt. Thank you for having me.
And join us next week. We'll have on Mr. Andrew Ferry, who's part of the recycle team with Tanaka Precious Metals. We'll get into the world of recycle a little bit deeper. Again, this is Green Rush, Mining the Energy Revolution with your host, Matt Watson. Until next time, thank you. Take care, you all.
Green Rush, Mining the Energy Revolution with Matt Watson.